Hey everyone, me Kevin here. We actually got a Monday holiday update from the Federal Reserve. Let's talk about what we just heard and what meeting was just scheduled between Powell and somebody else. We'll talk about that as well. Quick reminder, this video is brought to you by the expiring coupon code for the programs linked down below. Most of you, by the way, who are checking out right now are grabbing bundle number 1. Don't feel obligated to go for the bundle. It's obviously a bigger ticket to go for two things together, but a lot of people, I'm surprised, I'm looking at the numbers right here, there are like literally hundreds of you that are getting in the last few days that are getting the bundles of Stocks and Psychology of Money and the Zero to Millionaire Real Estate Group. And it totally makes sense because if you're really interested in stocks, most people on Wall Street in stocks, they don't really like real estate. They think, oh, well, my money's better invested in the market than it is in real estate. And this is such a fatal mistake. If you don't yet have 10 properties, which the odds are 99% of us watching this don't yet have our own 10 properties, you've got to be part of this. Like, join that Zero to Millionaire real estate investing group. You'll see what you're missing out on. I just collabed with Ben Malla. He's like, look, if you don't yet have $1 million of net worth, you shouldn't even bother with stocks. It's kind of interesting. So, but of course, a lot of us are in stocks. So anyway, keep that in mind. Largest price increase is coming. Yeah, there are always coupon codes. I know I see that kind of in the comments. People are like, oh, there's always a coupon. Just the price goes up over time. Remember that. When you look back a year ago, the prices were substantially lower. And we've got a big price increase coming now. So if you're thinking about joining, there's no better time than now. And prices are guaranteed not to be lower in the future. And you get new content as well. So check that out. Link down below. Okay, folks, let's talk about Waller. So Waller says that he is open to supporting 50 basis points at several more meetings in addition to the ones that we already have planned. We already had 50 in May, 50 June, 50 in July, 50 basis points of the Fed funds rate, right? And the expectation for the markets right now is that we're going to raise the Fed funds rate to somewhere between 2.5% to 3%, probably above the neutral rate, which is deemed to be 2.5%, so probably 2.75 to 3%. The market's already pricing that in. Now it is, at least. It took a while to price that fully in. I mean, this last 5 months of a stock market kind of collapse here is because the market has been pricing in, oh, okay, we're going to be at 1.5 by the end of the year. Oh, no, we're going to be at 2 at the end of the year. Oh, no, we're going to be at 3 at the end of the year, right? So now you've got Waller, though. He's a big fan of being so aggressive that we don't even have to care whether it's a demand problem or a supply problem, which he just said in the interview, with regard to what's causing inflation. The problem is inflation is too high and it's taking too long to get it down. Now, this taking too long to get it down is something that could create issues of impatience at the Fed, and it could lead them to make a policy mistake by hiking too much, and then all of a sudden inflation does potentially come down at the same time as they've hiked too harsh, which, remember, generally their efforts have a lagging impact on the market, so we usually don't feel the impact of that Fed funds rate until 6 months after, even though verbally and then in the stock market, the Fed can verbally kind of affect the stock market with just what their plans are. The latter impacts can take around 6 months to actually be felt. It used to be thought that it takes about 18 months to feel Federal Reserve monetary policy efforts, but now it's believed that because of the communications and modern age and how quick financial markets react, that we could price things in quicker, but still you have a lag here. And so the big thing with Waller is he wants to continue to hike until we start seeing a meaningful decline in inflation, which you can't really blame him because we're not seeing a meaningful decline in inflation. You look at the next CPI report and the expectations for the next one, we're expecting to go from 8.3% inflation down to 8.2%. It's like a 0.1% decrease in inflation. That's not enough. Now, the good news is we already know the Fed's planning on hiking in June and July. 50 basis points. That's already priced in. The big question is what's going to happen on the September 20th meeting. Well, the other thing to consider is we're going to get guidance, not by this next CPI report, but by the 3 after that. See, we're going to get on June 10th, the CPI report for May. Okay, great. But then we have 3 more coming out after that. The June report on July 13th, the July report on August 10th, and the August report on September 13th. Those 3 need to start showing meaningful declines in inflation. And if we're not actually getting meaningful declines in those 3 reports, not the next one, but the 3 after that, then we're going to have problems. And the worst case scenario is that we end up stuck somewhere of an inflation rate of like 6.5% to 7.5%, because then the Fed is going to have to painfully Paul Volcker us, because we'll probably see inflation expectations rise in the market because we're not getting them to come down. Inflation expectations can be measured by two things, consumer surveys, but my favorite is the 5-year break even because we know the Fed uses it as well. Take a look at the right side over here, 2.99. This is the 5-year break even rate. That's essentially a market's expectation of inflation. You can see how we've really declined here in our inflation expectations from this peak over here in March. And we kind of get these sort of like bobs up and down. As long as we do see this rotate down, we do believe and expect that inflation will also come down. That's the hope. Fingers crossed. We'll see. So the CPI reports are going to be really, really important. The last thing that Waller says that we want is that the public to believe that inflation will continue to go up, because then he says it becomes economically difficult and painful to reduce inflation. And he's right, because he's basically talking about then having to Paul Volcker us. Fortunately, right now, even the hawk, and this is a really important one in my opinion, even the hawk is not saying we need to Paul Volcker. Even the hawk, the most hawkish one, is essentially saying, hey, like, yeah, we need to go above neutral, maybe as much as 1% above neutral. That would be 3.5%, right? But we're not getting any indications from even the most hawkish person at the Fed that, oh, we need to, rug pull everybody. We need to go for like an 8% Fed funds rate and Paul Volcker us, essentially like what happened in the early 80s, where they raised the Fed funds rate to above the rate of current inflation to really show markets that we're forcing it down. But always remember, the big difference between the early 80s and now is that inflation expectations were skyrocketing. We just left the dollar, the gold standard 7-8 years before that, actually a little bit more before that, and expectations were this is it. This is the end of a monetary regime. That is not happening now, which is good. But what is happening is Joe Biden is going to meet with Powell. And you can only imagine that Joe Biden, who's been sandbagged by Manchin and Sinema, who's gotten virtually nothing done his first 2 years, is probably nervous about losing both the House and the Senate in November. And this is widely expected to happen. And you know that even though Powell and Biden should be politically separate because Powell does not work for the government, they work for the Fed, and that is not part of the government, you know that Biden's got to sit down with Powell and probably in some private meeting go, dude, man, like, can we get inflation down at the same time as we can pump the stock market back up, okay? Because Trump said in his rallies the stock market would crash if you elected Biden, and I got an election coming up, and we need a... And it's interesting because that political motivation kind of already aligns with what we're hearing from the Fed that, we'll probably pause in September and just see how things go. And it's like, oh, okay, really? So if you pause in September and you pause and you go with like 25 BP hikes, let's say September or November, you still have the December meeting after the election where you could get more aggressive if you needed to. So it wouldn't surprise me if they go 25 September, 25 November. Worst case scenario, if they need to go higher, they go like 50, 75 or something insane in December, and that'll be problematic. That would mean that inflation didn't end up coming down. It wasn't transitory, which I know a lot of people are like, it was never transitory, Kevin, like, get over it. Fine. But very interesting. In my opinion, paying attention to what comes out of that meeting is probably going to be something relatively political. And I'm curious to see what levers Biden's going to try to pull. And it'll be fascinating to see if Powell changes his tune. He definitely changed his tune from the last time they met. The last time they met when Powell was getting ready for confirmation, all of a sudden Powell became a little bit more hawkish and stopped using the word transitory. And all of a sudden, it's like, oh my gosh, like, we need to speak to the American people. We will get inflation down. It's kind of like, to some degree, and I hate saying this, he kind of has to play a little bit as a Joe Biden puppet. And this kind of similarly, this pressure happened with Trump as well. Trump was threatening to fire Jerome Powell back in 2018 if he didn't stop raising rates. And Powell ended up pausing. Now, the argument could be made that don't worry, like Powell would have made those decisions anyway. But every time we have these meetings, there tends to be a little bit of an inflection point. So let's pay attention to what comes out of that meeting. That meeting's on Tuesday. All right. So thank you so much for watching, folks. Coupon code down below. Take advantage of it, and we'll see you in the next one. Thanks. Bye.